Very good morning, friends. So I hope you're all doing good. And of course, always the presumption that your cumulative revision on the topic is going on. Though we are starting with a new, I would say, subtopic in terms of consolidation, not really connected with what we have done in Indes 110. So we have been doing the concept of consolidation where we cover up Indes 110, that is on consolidated financial statements. There are two more standards which deals with the concept of consolidation. One is Indes 111, that's called joint arrangements. And then there is another one also that is Indes 28, which talks about associates and joint venture. And some way or the other, of course, 28 is a bit connected with 111 also, not in terms of the larger concept, but yes, there is something which, offshoot comes out of 111 and there is a connect in terms of Indes 28. So we're going to focus today in terms of Indes 111. And I think before I take the journey forward, also let me tell you, I would be leaving a bit early today. Instead of 10 o'clock, I'll be leaving around 9. So that also means I'm going to eat your break as well. That's a little implication. So anyway, I think you can bear with that. So let's begin the journey in terms of Indes 111. That's called joint arrangement. So we're going to make a base in terms of this standard. And interestingly, I've divided this entire standard into a total of, you can say, 3 blocks. I'll not call them as 3 steps, though you can call them as 3 steps as well. And within each of these blocks, you're also going to see some 3-step model coming in. So it's not a very complicated kind of a standard. So we're going to divide our entire discussions in 3 blocks. And within each block, we're going to divide it in terms of 3 steps in each block. So let's, I think, begin the journey. So we've got Indes 111. And the name of the standard is called joint arrangements. The name of the standard is called joint arrangements. So the first 3 blocks, I think before we start with the standard, let me tell you what are the 3 block areas, what we're going to cover in this particular standard. The block number 1, so I'll put it as blocks. The first one, of course, is to understand that what is a joint arrangement. So I'll put it as JA, that is what is a joint arrangement. So naturally, the very first question what comes to the mind is that what is supposed to be a joint arrangement? The second is once you reach an input that yes, it is a joint arrangement, the second focus area is the type of joint arrangement. The second focus is to decide the type of joint arrangement. And in the standard, we've got 2 kinds of joint arrangement. One is called a joint operation. One is called a joint operation. That's what we can call JO. And the other one is called a joint venture. That's what I call JV. And that's also called as a JV. So how do you decide that it is a joint operation or is it a joint venture, JO or JV? So there are some parameters which are given in the standard. And of course, the standard is incomplete without discussing the accounting aspects as well. So we will look into the accounting of this arrangement in terms of the separate and in terms of the consolidated financial statements. So the accounting in terms of separate financial statements as well as in terms of consolidated financial statements. And I think it's pertinent to tell you at this stage that once you reach a conclusion that it is a JV, a joint venture, we're going to switch the accounting in terms of Indes 28. The accounting for a joint operation is covered under this standard, but the accounting for a JV is accounted under Indes 28. So when it becomes an associate, it is 28. When it becomes a joint venture, then also it is 28. So I think it's worth making a mention at this stage that as far as the accounting for the joint venture is concerned, so the accounting of JV is going to be covered in terms of Ind AS 28. This is for the purpose of consolidated financial statements. So as I said, we're dividing our discussions in terms of a 3-block area. First of all, get the focus that how do you decide it is a joint arrangement, JA. Once you conclude it is a JA, decide is it a JO or a JV, and then you decide the accounting in the separate and consolidated financial statements. I would say in the books of the investor, the parties to the arrangement. So the accounting which is given in the books of the parties to the joint arrangement. So let's now begin with the focus in terms of step number 1, or you can say the block number 1, that what is a joint arrangement. So let's now start with the block 1. Now I'm going to introduce you the concept in a step-by-step basis. So in order to understand what is a joint arrangement, how do you decide that it is supposed to be a joint arrangement? Well, if you look at the standard, it says a joint arrangement is supposed to be a contractual arrangement between the parties that gives them a joint control. So I would just like to create a mathematical equation based on the concept. It says a joint arrangement is a contractual arrangement between the parties to the arrangement and that gives them a joint control. So we can say a joint arrangement is, you can say, a contractual arrangement. Don't get worried on what is a contractual arrangement. We'll work upon that. So it says it's a contractual arrangement between parties to the arrangement. So it's a contractual arrangement between the parties to the arrangement which gives them joint control. So which gives them a joint control over the arrangement. So if I were to look at the key elements in terms of the definition, I would say there are basically 2 parameters. If I were to decide it is a JA, I need to see that it is a CA, that is a contractual arrangement, and a JC. I'm going to use some small little nomenclatures to explain the concept in the standard. So if I am looking at the key elements, I would say the first key element is contractual arrangement and the second key element is a joint control. So let's put it like this on an equation, that a joint arrangement is supposed to be a contractual arrangement plus a joint control. So don't get worried, we're just creating some chain of thoughts of the kind of questions you need to put across to yourself. So when you say that it is a joint arrangement, I will put across a question number 1. Is there a contractual arrangement? We'll see what is a contractual arrangement. And does it give a joint control to the parties? If yes, it is a joint arrangement. So the question now arises that what is a contractual arrangement and how do you decide that there is a joint control coming in? Now, when you say that there is a contractual arrangement, we can say there is an agreement between the parties. There is supposed to be an agreement between the parties. So when I say there is an agreement between the parties, which basically means that the parties to the arrangement have contractually agreed to the terms and conditions governing them. They've documented, you can say, the rights and obligations to the arrangement. They made an agreement which governs the rights and the obligations of the arrangement. So I would say the agreement which is there, this agreement is something which is defining what are the contractual rights. What are the contractual rights and the contractual obligations. So they have decided between themselves the contractual rights and obligations of the parties to the arrangement. So which means the very first thing to be seen in terms of this arrangement is that have the parties entered into an agreement, and through the agreement they've decided the contractual rights and obligations of the parties to the arrangement. If you say a yes, I would say yes, there is a contractual arrangement. So agreement could be an oral agreement, could be in writing as well, because it is enforceable under law. So we're not saying that there has to be, a written agreement, but generally you will see that they will define the agreement by way of a written agreement, but it does not preclude the presence of an oral agreement as well. So the parties have agreed between themselves that what are the contractual rights and obligations of each and every party to the arrangement. And then comes that what is a joint control. Now this is crucial. When you say that there is a joint control, I would say a joint control comes in if I am able to prove two elements. One is what we call CC, that's called a collective control. And the other one is called a UC, that is called a unanimous consent. You must be thinking, since morning I've been taking nicknames like JA, CA, JC, and now it comes to CC and UC. Don't worry, you'll also get the feel of these terms. Very soon they'll sink into the mind. So when I say that there is a joint control, the joint control means that you need to prove two things. One is called collective control. Now, what is a collective control? We'll see that. So we call this as CC. There has to be a collective control. And the second element which you need to prove is a unanimous. The second element you need to prove is a unanimous consent. And that is what we call UC. So I think my mind is now working on a three-step model already. And my mind is telling me that if I have to decide that it is a joint arrangement, then I will put across a total of 3 questions to myself. I'm going to first of all put across, so let me pinpoint the 3 questions to myself. The first question which I'm going to put across is there a contractual arrangement? Number 2, I'm going to put across a question, is there a collective control? And number 3, is there a unanimous consent? So I can say if you're looking at a joint arrangement, you need to see CA plus CC plus UC, and that makes it a joint arrangement. So can you please consolidate all this? These too many terms is creating a little confusion in life. Let's, I think, consolidate the picture so far to you. And then we'll start working on the collective control and on the concept of unanimous consent. Indirectly, we'll start working on the assessment of a joint control in the standard. Let's make it clear once. When you look at a joint arrangement, the standard says a joint arrangement is supposed to be a contractual arrangement between the parties. And it should give a joint control to the parties. So there are 2 main focus points as you decide that there is a joint arrangement. So get the mapping clear. So we need to decide that there is a contractual arrangement, CA, which results in a joint control, JC. So CA and JC, contractual arrangement and a joint control, is on the agenda. So we need to decide that there is a contractual arrangement 1, it leads to a joint control 2. Now we understood what is a contractual arrangement. A contractual arrangement is an agreement between the parties to the arrangement who have decided the contractual rights and obligations between each other. As far as the arrangement is concerned, the parties have got what kind of rights and obligations is mutually agreed between the parties. That means the presence of a contractual agreement. That makes it a contractual arrangement. The second is the joint control, that is JC, which has got 2 elements. Number 1, you need to prove that there is a collective control. And number 2, you need to prove that there is a unanimous consent. Now, what is collective control and what is unanimous consent? We are yet to deal with it. But once you need to prove a JC, a joint control, you need a CC, a collective control, and a UC, that is a unanimous consent. In other words, if you club all the inputs together, then if I join the dots, I would say that I've got 3 questions at the back of the mind. If you want to prove that it is a joint arrangement, Number one, is it a contractual arrangement, CA? Is there a joint control which has got two elements, collective control, CC, and a unanimous consent, that is UC? You prove me there is a CA, you prove me there is a CC, you prove me there is UC, it becomes a joint arrangement. So far so good. I hope, friends, you got my thought processes very clear. I hope I'm clear with my thought process that a JA is a blend of a CA and a CC and a UC. That's wonderful indeed. So let's take the journey forward. So we have now decided in terms of a simple three-step model. When you're looking in terms of a joint arrangement, we have decided a simple three-step model. And we said, typically in terms of the equation, we've got these three steps. Is there a CA? And these steps are on joint control, that is CC and a UC. So we'll now start working on this as well. So when I say CA, I said there is a contractual arrangement. We said there is a contractual arrangement, and we've already seen what is a contractual arrangement, in which the parties have agreed by way of agreement the rights and obligation. That's simple. Now let's see what is a collective control. Now we're going to work on the concept of collective control and on the concept of unanimous consent. So we need to work upon the collective control and on the concept of a unanimous consent. Now, please hear this carefully. When I say collective control and when I say unanimous consent, I am going to put a question to myself. Now, please analyze this question carefully. We'll take good examples and we'll understand the concept further. But let's first focus on the question which I need to put across for a collective control. First, let me say two things, process this in your mind and analyze that are these two different things or are they supposed to be same things? I cannot take decisions alone. I made a first question, I cannot make decisions alone. That means I don't have a control because I can't take decisions alone. So I need somebody's approval as well. I need somebody's consent as well. So when I cannot take decisions alone, then I am a part of the collective control because I need approvals of others to take a decision. So I cannot take decisions alone. And the next part is that I will be able to block other people's decisions also. I cannot take decisions without other party. That's one. That gives me collective control. And at the same time, they cannot take decisions without me. Trust me, a joint control is like a two-way traffic. When you're working on a joint control, it's like a two-way traffic. So in the first one, when you say collective control, it is saying, I cannot take decisions independently. I need the consent of the other people. But is it necessary that if I need their consent, that does not mean that they also need my consent? So you need to look at both the angles. In a collective control, you're going to see that can I take decisions alone? If I say no, I am a party to collective control. Then I say, can I block decisions taken by other so that they cannot take decisions without me? If I say, yes, I can block decisions, I have a unanimous consent. So when I'm going to look at the two elements, I'm going to put across the questions out here. For the concept of a collective control, I'm going to put a question that can I take independent decisions? Or let's say, can I take decisions alone? So we'll put across a questions that can I take decisions alone? If I say, no, I cannot take decisions alone, I'm a part of CC. Because I don't have a control, then I'm a part of the collective control because I can't take decisions alone. The next is, when you're looking at a unanimous consent, I will put across a question, can I block the decisions taken by other? So I'll put across a question, can I block decisions? Can I block decisions taken by others? So you need to get the answer in this particular case as yes. You need to get the answer in this case as yes. So in order to prove that you are a part of the collective control, prove it to me, you cannot take decisions alone. Then you're part of CC. And then you prove it to me that you can block decisions taken by others, then your unanimous consent is there. So as I said, it's going to be a two-way traffic. That people can't take decisions without me, I can't take decisions without them. It should not be one-way traffic that I am dependent upon them and they are not dependent upon me. It's both ways. That if I want to take a decision, then I need their approval. If they want to take a decision, they need my approval. Then only a joint control would arise. Let's now take some examples based on that. Because I think as far as the CA is concerned, it's not an issue because that's just an agreement. My focus is now coming in terms of explaining more the concept of a joint control with example. We'll take some more formal examples in the study material also very shortly. But let's first, I think, work more in terms of JC. So we are now working on the step number 2 and 3. So my focus is on the joint control. I am assuming in all these examples that the contractual arrangement is there. So I'm just looking at the joint control, whether there is supposed to be a collective control and a unanimous consent or not. So let's do one thing. Let's take some examples based on 2 parties, and then we'll create example based on 3 parties to prove the concept of a joint control. So let's do one thing. Let's, I think, create some examples, and I will divide my discussions based on 2 set of examples. Let's first consider that there are 2 parties in the arrangement, and then I think we'll consider 3 parties in the arrangement in order to prove the concept of a joint control in this case. And that was rightly said. Yes, there were 2 different things. I cannot take decisions alone is one thing, and you cannot take decisions without me is another thing as well. Okay, now let's consider 2 parties. Let's say there is 2 parties, A and B. Now watch this very carefully. One thing more which I would like to tell you at this particular stage, which we will work a little later. Decisions in the companies could be taken on the basis of voting power, or decisions can be taken by the board of directors. So when I'm looking at the assessment of a joint control, I need to first of all see that decisions will be taken on the basis of a voting power or on the basis of the board of directors. Right now, I'm assuming that decisions are taken on the basis of voting power, but I think it's worth making a mention at this stage that when you're looking at decisions, the decisions in a company could be taken either on the basis of, you can say, voting power, or the decisions can be taken by the board of directors, that is BOD. Unless mentioned otherwise, we always assume that decisions are taken on the basis of voting power. So I am assuming right now for this chart, I am taking an assumption. It is assumed that we are taking decisions on the basis of the voting power. So we're going to consider a percentage of voting power for the parties and take a decision. Now, watch this. Let's consider in terms of the voting power, A has got, let's say, 50% stake, and B has also got a 50% voting power, and to take decisions. Let's say the mandate in order to take a decision is that we need, let's say, majority to agree. So let's look at the example very carefully. We are saying that there is a 50-50 voting power which 2 parties have got, and the mandate is we need a majority to agree. Now let's ask the questions to ourselves very carefully. Can A take decisions alone? Will he be able to achieve a majority alone? No. Can B take decisions alone? No. So they are part of the collective control. Can A block a decision taken by B? Undoubtedly, yes. Can B block a decision taken by A? Undoubtedly, yes. In this case, you can see nobody can achieve a majority on its own. Because if A wants to take a decisions alone, he can't. If B wants to take a decision without A, he cannot. And neither B can take decisions alone and A can block decisions taken by B. He will say, boss, how will you decide without me? So in this particular case, I would say there is an implied joint control. Why do we say it is implied? Because 50-50 and there is a majority. I think it is implied there cannot be anybody taking a decision alone. If you need a majority, which means more than 50, none of them can achieve a 50, more than 50 independently. So they can't take decisions alone. That's one. They can definitely block decisions to be taken by others as well. And now let's change the percentage slightly. Let's consider the same example. And in this same example, let's consider that we need 75% to agree. Instead of saying majority, let's consider we need a 75%. Well, I think still the answer does not change. Because if you need a majority to agree, or if you need more than 75% to agree, nobody individually can achieve that percentage. And in any case, they will block decisions by other. So I would say even this is undoubtedly a case of an implied joint control. I want to make a stronger statement also at this particular stage. And I think you'll agree with me on this agenda. I am thinking that if there are two parties with a 50-50 stake, there will always be a joint control. Agreed. I'm saying if there are two parties to the arrangement, in this particular case, if you're having equal percentage, it'll always be a joint control. How would they achieve decisions alone? How would they? They will always be in a position to block decisions by party. That's rightly agreed. So I think we can make a strong statement out here that if there are two parties with equal percentage, so if there are got two parties with an equal percentage, it is always an implied joint control in this case. Two parties with equal percentage would always mean a joint control, 50-50. Let's introduce some more variations. In this case, let's change the percentage at this stage. Let's consider that the voting power which A and B has got, let's say this is 60 and let's say this is 40. And I need a 75% mandate in order to achieve, let's say, a decision. Now let's put the same questions to yourself. Though on a very apparent level, A has got a more than 50% stake, but that doesn't mean that he will automatically get a control over the company. In this particular case, can A achieve a 75% alone? No. Can B achieve a 75%? No. A needs to take the help of B. B needs to take the help of A. So A alone cannot take a decision. B alone cannot take a decision. Second, can A block the decisions taken by B? Yes. Can B block the decisions taken by A? Yes. I know you wanted to look at an example, where I need people's help and they don't need my help. Very soon coming in. Where I will not be able to take decisions without other people, but they'll still not need me. That's quite possible indeed. So in this particular case, again, I would say there is definitely a joint control as well. And that's an implied joint control again in this case, though it's an unequal percentage, but to achieve that 75% mandate, they need to listen to each other. They cannot take decisions alone, and they can easily block decisions taken by each other. Let's take a fourth variation in this case, and let's consider the same percentage, that is 60 as well as a 40%. And let's say in terms of the mandate, we need a majority percentage to be achieved. Now, in this case, if you need a majority percentage, can A take decisions alone? He can. In this particular case, he's got a majority stake of 60, and if you need a mandate of majority shares, A can take decisions alone. So in this case, I would say he's got a control. It's not a case of a joint control because A can easily take decisions independently on an alone basis. So in this case, I would say A has control. This is not a case of a joint control, but this is a case of, you can say, control. There is another interesting input which is coming to my mind. Can I say, looking at the third and the fourth example where A and B have got unequal percentages, can I say if there is unequal percentages, it may lead to a control or a joint control because it all depends upon what mandate do we need to achieve. So can I make a strong statement that if there are two parties with an unequal percentage, it could be a control or it could be a joint control? Agreed. So we can say in this particular case, I would say if there are two parties with unequal percentage, if there are two parties with an unequal percentage, then I can say this could be a case of control or a joint control. It all depends upon the facts of the case, and it could lead to any of the permutations and combination. So moral of the story, I think we've understood one thing. As far as the two parties are concerned, I would broadly say there are two broad cases in terms of two party. If they've got equal percentage, implied joint control, no further facts required. If they've got unequal percentage, I would say I need facts because there could be a control or there could be a joint control in this case. Now let's focus on the case of three parties with you. So let's go to the three parties now. Let's consider there are three parties now, A, B, C. And let's see what is the kind of mandate we require, and then we'll decide whether there is a joint control or not. So let's consider A has got a 50% voting power, and B has got a 30% voting power, and C has got a 20% voting power, and I need a 75% majority to take a decision. Now, please put the questions independently to you in terms of each one of them. Question number one, can A, B, or C take decisions alone? Nobody can achieve a 75% on a standalone basis. So they definitely are part of the collective control. Now watch this. If B and C join hands together, they get a 50% stake. Can A block decisions? Yes. If, let's say, for example, A and C join hands together, it makes it 70. Can B block decisions? Yes. Now let's say, for example, A and B join hands together, that makes it 80. Can C block decisions? No. Did you see now? If you specifically look at the party number C, is he in a position to take independent decisions? No. He's a part of the collective control. But can he block the decisions taken by others? He cannot. Since he cannot block the decisions taken by others, he is not a party to the joint control. He is a party to the arrangement, but he's not a party to a joint control. So now you can see the evaluations of the two questions carefully. That in the first case, when you're saying that can I take decisions alone, C is not in a position to achieve a 75% mandate. He cannot take decisions alone. But at the same time, when you're looking at the second aspect, and that is, can he block decisions taken by the other parties? He cannot block the decision. If A and B join hands together, he would not be in a position to block. So in this case, who's got a joint control? A and B. In this case, we can say that the joint control is with A and B. Then what about C? If he does not have a joint control, then what is his status? I will evaluate Ind AS 28 and see whether he's got a significant influence at a 20% percentage. If yes, he will apply Ind AS 28. He will say that there is a significant influence and do the consolidation accordingly. A and B will say that they are parties to the joint control, so they will apply Ind AS 111. But as far as C is concerned, you need to go and further evaluate. If he's got a significant influence, he will apply Ind AS 28. So let's put this down. So we can say in this particular case, if you look at C, we can say we need to assess. We need to assess if he has significant influence. So we need to make an assessment whether he's got a significant influence or not. And if you say yes, he's got a significant influence, then you are going to apply Ind AS 28 for this purpose. And if he doesn't even get a significant influence, then he is supposed to be a passive investor. And if he becomes a passive investor, then he would apply Ind AS 109. Carry the investments which is at a fair value through P&L or through OCI, whatever you did in financial instrument standard. Wow. Okay, let's, I think, take another permutation combination as well. Let's take another combination and let's say the voting power in this case is 50. Let's say the voting power is 25 and let's say this is also 25 and we need a 75% majority in this case. Now we can see some beautiful inputs coming in as far as the permutation combinations are concerned. Now let's put some questions out here. Can A take decisions alone or B or C take decisions alone? No, they cannot take decisions alone. So they are a part of the collective control, CC. But now let's look at the fact. If B and C join hands, can A block decisions? Yes. If A and B join hands, can C block decisions? No. If A and C join hands, can B block decisions? No. There are two combinations which can achieve a joint control in this case. The two combinations which can achieve the joint control. The two combinations which can achieve the joint control is that A and B join hands together or A and C join hands together and they can achieve a 75% majority in this particular case. The standard makes it very clear and there is a complete, very important clarification at this end. If there are more than one combinations which can achieve a joint control, the arrangement, the agreement has to specify which combination is going to work. If there are two or more than two combinations which could achieve a joint control, the agreement needs to make a specific mention that which combination will achieve a joint control. If the agreement does not mention which combination is going to work, nobody is got a joint control. You heard me correct. Nobody has got a joint control. If the agreement doesn't make a mention that A and B combination will work or A and C combination will work, nobody gets a joint control. Everybody will be sent to Ind AS 28 and make an assessment of a significant influence. So in this particular case, the clarification which is given in the standard is if two or more than two combinations achieve a joint control. If two or more than two combinations achieve joint control. So when you see two or more than two combinations achieve a joint control, agreement has to specifically the agreement has to specifically mention which combination is to be considered. So which combination is to be considered. So we'll have to clearly state in this particular case that which combination is going to be considered. Okay, there is a question. So how is C part of JA if he doesn't have a joint control, because it is there when there is CA and JC. Okay, interesting. Let me clarify. Now, hear this carefully because this is going to trigger a lot of inputs when I come to my accounting in the books of the parties. Now, watch this carefully. Especially if you look at the second case, the first case, 50, 30, 20. I would say there are two kinds of parties to the arrangement. Please hear this carefully. This is a very crucial point which I am also going to remind you when I come to accounting. So I would say there are two parties in this kind of arrangement. One is a party to the arrangement which has a joint control, and one is a party to the arrangement which does not have a joint control. So I would say A and B are the parties which have a joint control, and C is a party which does not have a joint control. Do you think the standard will give a different or a similar accounting to AB as well as C? Undoubtedly a different accounting. So since they've entered into a contractual arrangement, they're all parties to the arrangement. But yes, having said that, they're all parties to the arrangement. A and B are parties to the arrangement with a JC. C is a party to the arrangement without a JC. So the standard says a different accounting for AB and a different accounting for C. So we'll not say that he's not a party to the arrangement. He remains a party to the arrangement, but he does not have a joint control. So his accounting is going to be different as compared to the accounting for A and B. I guess clear? Wonderful indeed. Okay, so this I think gives us a clarity in terms of the joint control. So moral of the story, when we are looking at the concept of a JA, we'll pick up some questions as well, but now we are clear that when you're looking in terms of a JA, in terms of the joint arrangement, CA, contractual arrangement, they've got an agreement between the parties where rights and obligations are clearly defined. CC, I cannot take decisions alone. UC, I will be able to block decision taken by others. So if you prove a CA, if you prove a CC, and if you prove a UC, it is a JA. I guess now we can do some practical illustrations with you. There are a few questions which are given in the back of the standard as well. So I am just going to do some examples which are given in the back of the appendix of the standard. These are also examples given in the study material as well, but I've just picked them separately for convenience. So let's, I think, have an input in terms of this. Let's, I think, read the inputs in this example number 1. It's an example given at the end of the appendix of the standard, but this is similar kind of questions in the study mat as well. So let's look at example 1. It says, assume that there are 3 parties which establish an arrangement. A has got a 50% voting rights. B has got a 30%, and C has got a 20%. And the contractual arrangement between ABC specifies at least 75% voting rights are required to make decisions about the relevant activities of the arrangement. Now, we're going to see some examples later on the concept of relevant activities as well. Right now, we're looking at the assessment of a joint control, but then a joint control means that they are supposed to take decisions jointly on relevant activity. So we're going to work upon the concept of relevant activities also very soon. Now, I think you can clearly see that ABC has got 50, 30, 20. And we need to achieve a 75% mandate in this particular case. And you can clearly see that this is similar to the example which I've already given you. A and B will have a joint control and C will not have. Let's read. Even though A can block any decision, it does not control the arrangement because it meets the agreement of B. The terms of the contractual arrangement requiring at least 75% voting rights implies that A and B have a joint control of the arrangement because decisions about relevant activities cannot be made without A and B agreeing. But I just added some more elements to you and said that in this particular case, C is not a party to the joint control. You need to basically decide in this case that he's got a significant influence and he would apply Ind AS 28. Let's go further. So let's take another example number 2. And this is going to be based on a similar example which I just gave you. I've already covered that in the chart as well. It says, assume an arrangement has got 3 parties. A has got a 50% voting rights in the arrangement and B and C have got 25%. And it says the contractual arrangement specifies at least 75% voting rights to make decisions about relevant activities of the arrangement. So we can clearly see that this is again similar, 50, 25% and 25%, and we need a 75%. So there are 2 combinations working in. Either A and B can achieve the combination, or we can say A and C can achieve the combination. So there are 2 combinations. The agreement needs to make a specific mention which particular combination is going to work. Let's see. So even though A can block any decisions, it does not control the arrangement because it needs the agreement of either B or C. In this example, A, B, C collectively control the arrangement. Can you see? A, B, C collectively control. All the 3 has got a CC because nobody can take independent decisions. They're part of the collective control. However, there is more than one combination of parties that can agree to reach a 75% voting rights, either AB or AC. In such a situation, to be a joint arrangement, the contractual arrangement would need to specify. Can you see the word? Would need to specify which combination of the parties is required to agree unanimously to take decisions on relevant activity. And I just added that flavor. And I said, if the agreement does not make a mention that which combination is going to work, nobody gets a joint control in that case if it is not explicitly mentioned in the agreement. Great. Let's look at the example number 3. Assume an arrangement in which A and B each has got a 35% voting rights in the arrangement, and the remaining 30% of the rights are widely dispersed. Now it's not exactly a case of 3 parties, but it's like, 2 parties and the other investors are widely dispersed. So we've got A and B, and we have got others. So A has got a 35%, B has got a 35%, and others are widely dispersed in this particular case. Now the question arises that are there supposed to be, okay, let's read further. Decisions about relevant activities require a majority of the voting rights. Now the question rises, can I achieve a majority with A and B? Yes. Can I achieve a majority with A and others? Yes. Can I achieve a majority with B and others? So, but others are widely dispersed. That doesn't make a difference. How actively they come into the meetings, how actively they participate in the meetings of the company is also going to be a deciding factor. So you cannot say that, I would just ignore these others and say that there is only one combination A and B. The other investors might be widely dispersed, but how actively they come and engage is important. It says A and B have a joint control of the arrangement only if the contractual arrangement specifies that decisions about relevant activities require both an A and B agreeing. So we can say that even in this case, it's more than one combinations per se. Since it is more than one combinations, the agreement needs to specifically specify that if A and B needs to agree, the agreement should specify. Otherwise, nobody, as I said, AB is going to be having a joint control. So moral of the story. The combinations coming in is not necessarily with a single entity. It can be with other investors, even though it is widely dispersed. You could achieve combinations in terms of A others, B others, A and B. So if I want that this is the leading to a joint control, the specific mention in the agreement is necessary. I guess so far, so good. Okay, so this was the inputs in terms of the control. Okay, let's, I think, also have a small little inputs out here. All what we have discussed so far is also been, just represented in a small little flow charting out here. So what we have discussed so far, this is already what we have discussed so far. This is a quick summary which is also given in the study material as well in terms of the steps. It says assessing a joint control. Does the contractual arrangement gives all the parties or group of parties the control collectively? It is collective control, CC. And then it says, if you say no, then you're outside the scope of the standard. And if you say a yes, you go to the next one. Do decisions about relevant activities require a unanimous consent of all the parties that collectively control? So you see. So you can see that collective control and a unanimous consent. If it is no, you're outside the scope. And if you say yes, the arrangement is jointly controlled and it is supposed to be a joint arrangement. So moral of the story, that a joint control is supposed to be collective control, CC, and a unanimous consent, UC. I hope, friends, I am pretty clear on the picture as far as assessment of a joint control is concerned. I guess your comfort zone should be almost like 10 on 10 so far. We're not completely done with the aspect of joint control assessment because there are more inputs coming in. But to the extent of a joint control assessment on a voting power is based, I think the comfort zone should be 10 on 10. Let's get your comfort zone scores at this stage. Brilliant indeed. Now, before we go further, I think let's take some more questions on the study material with you. So I'm just going to take you to a few more questions in the study mat as well. So there are some questions which are given in terms of voting rights. So we'll just take some few questions in the study mat to give you good feel factors. So we'll just have a quick look at a few questions as well. Let me zoom this across. So we'll now run through a few questions before we go further. Let's have a look at a few questions in the study mat. Let's, I think, first of all, look at the illustration number 2. It says in illustration number 2, PQRXYZ established an arrangement which each has got a 50% voting rights. And the contractual arrangement specifies at least 51% voting rights required to make decisions. Whether the arrangement can be treated as a joint arrangement. Your inputs. Can I say in this particular case, there are two parties 50-50? I already made a conclusion that if there are two parties with equal percentage, it is always implied joint control. That's right. So I think this is very clear that they have got implicitly agreed that they've got a joint control. Let's go to the next one. ABC established an arrangement. A gets a 50%, B gets a 30%, and C gets a 20%. We have already done this. So this is the same example which I covered with you. So this is automatically covered. Done. I guess let's also have a look at illustration 1 as well. ABC and DEF entered into a contractual arrangement to manufacture a product and sell it in the retail market. As per the arrangement, decisions about relevant activities requires the consent of both the parties. The parties share the returns of the arrangement, whether they can be treated as a joint arrangement. If you require the consent of both the parties, can I say that means there are two parties requiring a consent of both, implied joint control again. So they need a unanimous consent of both. Simple and straight. Wow. That's like a wow factor. Okay, let's, I think, take it further as well. So I'm just going to crop this a bit. We have done the previous one. Let's go to the illustration number 4. So let's have a look at illustration number 4 now. So in terms of illustration 4, I am given the input. It says an arrangement has got 3 parties. X has got 50 and Y and Z got 25% each. Oh, we've already done this as well. There are going to be 2 combinations achieving this and the agreement needs to specify this. So same example. This is already covered by me. Now let's have a look at illustration number 5. An arrangement is got A and B with 35% and the remaining 30% widely dispersed. Same example which we did, which is given in the appendix to the standard. Wow. Can you see how simple the life is? Let's go ahead. Now comes a little more inputs. I think before I take this particular part, I guess now I need to give you a little more insight in terms of things. I need to give you a little more insight in terms of things before we go further. I'm now going to just give you more inputs at this stage. You know, when you're going to get questions on the assessment of a joint control, the examiner could assess different aspects of assessment of joint control. I think, let me just come to the chain of thought. Let me just come to the chain of thought at this particular stage. I am again coming back to the assessment of joint control. I'm again coming back to the assessment of joint control, and let's see what kind of variety of questions can you get in this particular case. As I said a little while back, an assessment of joint control could be voting power based, or it could be based on the decisions are taken by the board of directors. So I would say now you are going to see 2 kinds of questions. You're going to see 2 kinds of questions. So when the focus is in terms of the decisions are taken, there are 2 kinds of questions. One is that you're going to see the decisions are taken either on the basis of voting rights. The decisions are taken on the basis of, you can say, voting rights. Or we can say the decisions are taken by board of directors, that is BOD. Now let's make one thing more clear. If the decisions are taken by board of directors, then in that particular case, what I need to do? I need to basically see that if I get the right to appoint and remove the KMP, I get the right to appoint or remove the KMP. So in this particular case, we need to see very carefully that what kind of decisions are taken on what basis. Now please hear me carefully. If decisions are taken by the board of director, I may be having, let's say, a 60% stake in the company, but decisions are not taken on voting power. So what does that 60% have a meaning? Nothing. Then in that case, it all depends upon what is my representation on the board of director. Since decisions in the company is taken on the basis of board of director, so what is important is that as a party to the arrangement, how many directors can I have a representation with me? How many directors can get represented in the board of directors? So your voting power in that case will take a back seat, and your right to appoint or remove the board of directors is going to be important. So when you look at a question, you need to carefully see that the voting rights is the basis of taking decision, or the board of director is the basis of taking decisions. And accordingly, you'll see that if this is the base, how many directors do you represent on the board? Next, the focus of the question could be in terms of relevant activities. The examiner could just focus in terms of relevant activities with you. The decisions which are taken have to be taken on relevant activities. Now, please hear this carefully. There might be, let's say, 3 parties to the arrangement, and they may be in charge of different kinds of activities. Does this mean that, the activities which are taking place may keep changing? Let's say, for example, in a particular year, I find that the certain activities are relevant, but I find at a certain second year end, another set of activities are relevant in nature. So is this assessment of a joint control a one-time assessment? Of course not. The assessment of a joint control is a continuous assessment, and who is in, you can say, the control of taking the decisions on relevant activity depends. Like, for example, when the company is in a construction phase, somebody might be in a, power to take decisions in construction phase. Let's say when the company reaches the sales and the marketing stage, somebody else could be in terms of, importance of taking decisions. So what is also important is that when you say that somebody has got majority voting rights, that doesn't automatically imply a joint control. What is important is that you should be able to take decisions on relevant activities. So in a given phase, as a party, I might be in a position to take decisions, but in a certain phase, I may not be in a position to take decisions. So sometimes the examiner would also assess, something that if you look at the voting rights, it is very apparent that the person has got majority voting rights or he's got collective control. But is the collective control giving him the right to influence the relevant activities or not? So we'll now see some questions based on that. So we'll see questions when the decisions are taken by the board of directors, and we'll see that how does a relevant activities play a role. Let's, I think, go now back to the study material. So let's have a look at now the illustration number 6, which is based on a board of director. So let's have a look in terms of the BOD. It says electronics is established by two investors, R and S. The investors have got a 60% and a 40% voting right. As per the articles of association, both the investors have the right to appoint two directors each on the board. The directors appointed by each investor will act in accordance with the directions of the investor who has appointed them. Articles of association provides that decisions about relevant activities will be taken by the board of directors through a simple majority. Since it is very clearly stated that decisions are going to be taken by the board of directors, your voting power will take a back seat. So in this particular case, even though the investor has got a 60 and a 40% voting power, it is meaningless. I will not consider the 60-40% to decide who has got a control or a collective control. It is only the power to appoint the people on the board is going to be deciding factor. Since each one of them can appoint two directors and we need a simple majority to take a decision, it is a case of a joint control. Let's consider if voting power was a base, then one of the investors would have got a control. But in this case, since the voting power is not the base, the appointment of the BOD is important. So let's read, determine whether electronics is controlled by single investor or jointly controlled by the other investor. The decisions about relevant activities are taken by the majority board of directors. Hence, out of the 4 directors, at least 3 need to agree. Accordingly, directors appointed by any one investor cannot take decisions independently without the consent of at least one director appointed by the other investor. Hence, the company electronics is jointly controlled by both the investors. I think this becomes one case. And I would also advise that, when you do these examples, illustrations, and all revise this, try to create a beautiful mind map as well. Which questions are based on voting rights? Which questions are based on the majority board of directors? Which questions are based on relevant activities? It gives you a complete mapping in mind. Let's go ahead. Now, there is another interesting illustration, number 7. Sometimes out of the 2 investors, one may be powerful, but then you would see that the chairman gets a casting vote, that if there is a tie, he says, I will decide the fate. Let's see. MN Software established by two investors, and both investors have got a 50% voting power for each investee. It seems that there is an implied joint control. As per the articles of association, both the investors have the right to appoint two directors each on the board as well. Equal voting power, equal right to appoint board of director. The directors appointed by each investor will act in accordance with the directions of the investor. The decisions about relevant activities will be taken by the board of directors through a simple majority. Here again, the decisions are taken on the basis of board of director. Let's, I think, take this further. And now we can see, so decisions are taken by the board of directors, and then it says further, Article of Association also provides that M has got the right to appoint the chairman who will get a casting vote in case of a deadlock situation. So both of them can appoint equal number of directors, but if there is a conflict, if there is a deadlock, then the chairman appointed by M is going to be having a casting vote. So at the end of the day, the chairman will be listening to whom? He would be listening to the investor M. So does this mean that there is a joint control? No, there is going to be a control by M because he can appoint the chairman who will be taking decisions in terms of deadlock. The decisions about relevant activities require majority board of director. Hence, out of the 4 directors, 3 need to agree. And however, so it says accordingly, directors appointed by one investor cannot take decisions independently. However, the chairman of the board has a right of casting vote in case of deadlock. Hence, M has got the ability to take decisions on relevant activities. 2 votes by directors, 1 vote by the casting chairman. Therefore, M individually has the power to, influence this, and there is no joint control. So, moral of the story. You can say when voting power is a base, my mind is not working. If voting power is a base, you're just looking at, the chart which I gave you. My chart is good enough for that. But if you're considering that there is a majority board of directors, your voting power takes a back seat. And how many directors can be appointed is important. And if there is a chairman casting vote, that is also important. So I would just like to go back and add some elements out here. So let's add some elements out here. So if you say I am in this case decisions taken on the basis of voting right, you can refer the chart which I gave you based on the 2 and the 3 parties. So my entire chart of 2 and 3 parties was taking care of the voting rights. Okay. So what if M can appoint 2 directors, one of them as a chairman, but N can appoint 3 directors, and then they will have a power. So M can appoint 2 directors, one of them can be a chairman, and N can appoint 3 directors. Well, I think in that particular case, how would you prove the casting vote by the chairman? Because if M can appoint effectively 3, and the other person can appoint again 3, there will be a deadlock in that case. I think hypothetically to me, that situation cannot be practically possible. We cannot have a chairman appointed with 2 and 3, and then you get a chairman. Then even the chairman will create a deadlock every time, right? You got my point. Because in this particular case, a deadlock means equal votes. So with the chairman being present, and if you say that he gets a casting vote, I think in spite of the casting vote, there will be a deadlock every time. So not possible to me. Okay, so if the decisions are taken by voting rights, refer the chart. If it is by board of directors, we can say the voting rights takes a back seat. The voting right takes a back seat in this particular stage. So we will not look at the voting rights in this case. They will take a back seat. So in this particular case, we need to see who can appoint more directors. We'll have to see who can appoint more directors in the company. So whosoever can appoint more directors in the company, he is going to get the power. Okay, so this is done. I think let's go ahead. So this is done. Let's look at the illustration number 8 as well. And I think then we'll go to our step number 2. It says ABC established 2 investors, ABBC. Each has got a 50% voting power. So based on voting power, it seems that there is a implied JC. But it all depends. As per the Articles of Association, AB and BC can appoint 3 directors and 2 directors respectively on the board. The directors appointed by each investors will act in accordance with directions of the investor. Further, it also provides that decisions are taken by the board of directors through simple majority. Now we can see that one of the investor can appoint 3 and the other investors can appoint 2 directors. Whosoever can appoint the majority directors gets a control. There is no joint control in this case. So whether ABC is jointly controlled? No. So we can say simply ABC is not jointly controlled. So we can say AB can take decisions independently without the consent of any other director. So AB gets a control in this particular case. Right, friends, I think that takes care of more or less the questions on this area. Okay, I think now we need to discuss something more on the relevant activities parts as well. Having taken the decisions on the basis of voting power, we've done questions on that. Having seen the questions taken by majority board of directors, we've seen that. Now the focus turns to relevant activity. Now we are looking at not the concept of a joint control, but the focus is who is in a position to take decisions on relevant activities in a business. Okay, so let's, I think, go ahead. And I guess we can have a look at this particular example. Let me just crop this up a bit. This is an interesting illustration number 10. This will give you a good insight about things. So let's, I guess, go ahead with the illustration number 10. So let's have a look at the illustration number 10. This is based on the relevant activity. So this will throw us a light when we are focusing in terms of the relevant activities in this case. Let's read. It says entity R and entity S establish a new entity RS to construct a national highway and operate the same for a period of 30 years. So they are going to do the construction and they are also going to operate the same for a period of 30 years as per the contract given by government authorities. Now, as per the Articles of Association, RS, the construction of the highway, will be done by entity R. Now, watch this carefully. It says RS, the construction of the highway, will be done by entity R. And all decisions related to construction will be taken by R independently. So R is in charge of taking decisions on construction. Nobody can disturb him in terms of taking decision. After the construction is over, S will operate the highway for a period of 30 years and all the decisions related to operating the highway will be taken by S independently. It seems that when the construction will go on, R will be in a position to control. It seems when the decisions, when the highway will be operated, S will be in control. So as of now, we can say there is no joint control, that we need to see that whatever phase is going on. And accordingly, based on that phase, each and every party will have a control during those phases. So it would be a control of one during construction. It will be a control of the other during operations. But let's see further. However, decisions relating to funding and capital structure is taken by both the parties with a unanimous consent. Now you need to filter which decisions are important in nature. Everything is relevant. Construction is relevant, operations is relevant. But if you notice, there is a decision of funding as well as a capital structure. Can you construct without taking a decisions to fund and to decide a capital structure? No. So in this particular case, out of all the activities, that is construction, that is operating, as well as in terms of funding and capital structure, which is the most relevant activities? The most relevant activities is the funding and the capital structure, and that decision needs the unanimous consent of both. Since that is the most relevant activities, we can say, even though they've got independent control over certain activities, but the most relevant activities requires a unanimous consent. So therefore, there is going to be a joint control between the parties. Let's see. So we can see construction is R independently, operation is S independently, and funding and capital structure needs a joint decisions by both. All activities are significant for RS, but since funding and capital structure are essential, without which construction and operation cannot commence, it is highly significant. Moral of the story: when you are given a couple of activities in nature, you need to see that if there are a lot of activities, we need to see which is most significant in nature. Out of the most significant activities, who is in charge of that? If there is any one person in charge, he gets a control. If there is unanimous consent, it is a joint control. So let's go back. Let's go back on the agenda and let's add out the inputs out here. So when you're focusing in terms of relevant activities, what is the focus point? We need to decide which activities are most significant. We need to decide which activities are most significant in nature. So we need to decide which activities are more significant in nature. And then accordingly, you'll have to decide that these significant activities, decisions are taken stand alone or on the collective basis. So we can add on. So we need to decide which activities are significant in nature, and we can say we need to assess these activities, decisions, these activity decisions need unanimous consent or not. I'm putting as UC. So need to assess that these activity decisions need a unanimous consent or not. If they need a unanimous consent, there will be a joint control. And if they don't need a unanimous consent, then we can say there could be a control of one of the parties. Brilliant. So let me just consolidate the picture in terms of the assessment of joint control once again out here. My mind is now working that when I am looking at a joint control, rather let's make a quick interesting mind map at this stage. That would be great. So I think this part is done, and then there are a few more clarifications that can be done that you can self-read. Let me just now quickly make a little interesting mind map at this stage. Moral of the story: my step number 1 is done. Now let's, I think, just first map up the concept in terms of things. So let me just map this up. I'm now looking at a mind map in terms of my step number 1. I'm looking at my mind map in terms of step number 1. What are the considerations? What kind of questions can you confront in this particular step is what we are looking at. And there could be wonderful kind of MCQs which could be drafted on this area. So when I'm looking in terms of the step number 1, we've already seen that the input is you are deciding, is it a joint arrangement, for which we need to see, is there a contractual arrangement resulting in a collective control and resulting in a unanimous consent. And if you put these together, this is what we call a joint control. Now, you may not get questions on making an assessment whether it is a contractual arrangement. So I think we leave the focus in terms of contractual arrangement. We may not get a question, but still we can just make a mention that contractual arrangement is supposed to be an agreement which will basically lay out the rights and obligations of the party. That will basically lay down the rights and obligations of the party. So this is all about the contractual arrangement. We may not get any questions to see that there is a contractual arrangement. Now, coming to the part in terms of joint control. Coming to the part in terms of joint control, we can get three categories, or rather first we can say two broad categories of question. One is the assessment. One is the assessment of a joint control. And when you say the assessment of joint control, the assessment could be based on voting rights, or the assessment could be based on representation of board of directors. So it could be on account of representation of the board of director. So when you look at the assessment of the joint control, you can see two inputs which could be given. Now, when you're looking in terms of voting rights, I would say there could be two or there could be three parties, and the chart which I gave you is good enough to decide the assessment of joint control. That would be on the basis of voting rights. When you're looking at the representation of the board of directors, then in that particular case, your voting rights are irrelevant. They will take a back seat. You will not decide on the basis of voting rights absolutely. So you will only decide how many directors can be appointed. How many directors can be appointed? So we just need to consider that how many directors can be appointed, and that would be the deciding factor. Plus, we'll also have to see that if there is any kind of casting vote by the chairman, that would also be the relevant factors. That's one area of discussions. The second is that he is asking you the list of relevant activities. We need to see that who is responsible in terms of taking decisions on relevant activity. So he'll give you a list of relevant activities. And once you are given the list of relevant activities, you need to filter. You need to basically filter which is the most significant activity. You need to filter which is the most significant activity out of the relevant list. Like we saw, construction, operation, capital, and all those things. So if you're given a list of relevant activity, filter out which is the most significant activities and see who is responsible in terms of these most significant activities, and that would be the deciding fate. Right, friends? I hope we've got the complete mapping in terms of the step number one, that what is the concept of a joint arrangement, which is typically how to assess a joint control with the help of voting rights, representation of the board of directors, and if you're given a relevant list of activities, then which activity is the most significant, who is responsible would decide the fate. So far, so good. I guess now we can go on to the next agenda of discussion. So now we're going to go to the next area of discussion with you, and that is deciding the step number 2. Now we are coming to the next area of discussion, and that is deciding the step number 2. Now, what's this? This is going to be again a little crucial discussion. We divided our discussions in terms of 3 blocks in the standard. The block number 1, that is it a joint arrangement, done. Now we are on the block number 2, that if it is a joint arrangement, is that supposed to be a joint venture or is that supposed to be a joint operation? What are the parameters in terms of taking the decision? So let me now come to the block number 2. So let me just put the inputs. We are now going to work on the block number 2. This is deciding the type of arrangement. This is deciding the type of joint arrangement. Is it a joint operation or is it a joint venture? This is the decisions to be taken. I'm again going to give you a 3-step model based on this particular input. So I'm going to give you a decision based on a 3-step model. Now watch first of all, the steps out here, and then we'll work upon the steps. The first is you need to put across a question. This is not first step. This is first putting a question. Did you create a separate vehicle as a part of the joint arrangement? Let's say 2 entities, A and B, enter into a contractual arrangement. Did they create a separate vehicle? Did you form a separate entity or not? So the standard says that if it is not structured through a separate vehicle, it is outrightly a joint operation. Simple. My first focus point would be that if you do not create a separate vehicle, it is undoubtedly a GO. So when 2 entities enter into an arrangement and they do not create a third entity, so 2 entities come together and do not create a third entity, it is outrightly a joint operation. But if you say, yes, we have created a separate vehicle, then comes the 3-step model, which I need to apply in this particular case. So before you apply the 3-step model, you need to first of all zero down on one single question. You need to first of all decide number one. Is a separate vehicle created? If no, it's a GO. If yes, you apply a 3-step model. Now let's see what is to be seen in terms of the 3-step model. The step number 1 is we need to consider the legal form of the separate vehicle. The step number 2 is we need to see the terms of the contractual arrangement. And the step number 3 is to see other facts and circumstances, and that would decide whether it is a JO or it's a JV. We could decide it's either a JO or we could decide it's a JV. So can you put it once again? I'll put the thoughts once again to you. Let's see the chain of thought which needs to be applied. In terms of the block number 2, when you decide that a joint arrangement is JV or is it a JO, your question number 1, did we create a separate vehicle? If you say no, JO. If you say yes, go to the 3-step model. In terms of the 3-step model, you will first evaluate the legal form. Now don't get worried on what is a legal form. We're going to work upon that. So we will say number 1, see the legal form. Then go to the step number 2, see the contractual terms of the arrangement. And then the step number 3, other relevant facts and circumstances. Now please hear me carefully, because what I'm about to tell you is going to be slightly technical. Don't worry, we'll work upon the chain. But watch this carefully. This is step number 1, legal form. This is step number 2, contractual terms. And this is step number 3, other relevant facts and circumstances. Now, I will apply the step 1 and go to step 2. If the inputs in terms of step 2 is given, I'll not go to step 3. Please hear this carefully. I will apply the step number 1 and go to step 2. If the inputs in step number 2 is given, I'll not go to step 3. Now, if the inputs in step number 2 is not given, I'll have to go to step number 3. So you apply step 1 and see, are the details to step 2 given? If given, decide step 2, end. If not given, go to step 3 and decide. The need to go to step number 3 will arise only when the input in step number 2 is not given in the question. So you will apply step 1 and then go to step 2. If the input in step 2 is given, no need to apply step 3. Decisions will be taken on step 2. If the inputs on decision step number 2 is not given, you go to the step number 3 and then take a decision. Got my point? Now, let's go further. In the first step, we are saying that we need to see the legal form. The standard works on a very simple concept that we need to ensure that the parties to the arrangement and the separate vehicle created are having a separate legal entity concept. So we need to ensure that the parties to the arrangement and the separate vehicle created creates a separate legal entity concept. So we need to ensure that the parties to the arrangement and the separate vehicle created are separate legal entity in themselves. How would you ensure that they're separate legal entity? When the parties created a separate vehicle, they could have created, for example, a company. They could have created, for example, a partnership firm, which is LLP. They could have created, for example, a normal partnership firm. If they create a company, a separate legal entity is automatically established. If they create an LLP, a separate legal entity is automatically established. But if they create a normal partnership firm, a separate legal entity is not established. Don't worry, we'll document everything later. So what I'm saying, in terms of the legal form, you need to make an evaluation. In terms of the legal form, you need to take an evaluation. Did you create a company? If yes, separate legal entity established. If you create a partnership firm, LLP, separate legal entity established. But if you create, for example, a normal partnership firm, separate legal entity is not established. If the separate legal entity is established, it's a JV. If a separate legal entity is not established, it is a JO. So let me give you the chain again. I am saying that in this particular case, if the separate legal entity is established as a company or an LLP, or the separate legal entity is established like a normal partnership firm. If you're going to create a company or an LLP, then in this case, it's JV. If it is a firm, then it is a JO. So what you need to ask yourself in step number 1 is, did you create a separate legal entity? Of course, you said yes. Then you came to the 3-step model. I will only put across a question. Did you create a company or LLP? JV. Did you create a firm? It's JO. Irrespective, I will go to step number 2. Irrespective, I will go to step number 2. Now, in terms of the step number 2, we need to look at the terms of the contractual arrangement. Now, what I'm about to tell you is going to be very, technically sounding very technical indeed. It's a company, but it's run, the arrangement is created, it runs like a firm. You heard me correct. Just hear this again. You created a company, but it's run like a partnership firm. So how would you create a company and run it like a firm? How is that possible? Now, when you look at the terms of the contractual arrangement, in terms of the contractual arrangement, there will be 2 things. The parties to the arrangement decide that they will get a share in the net assets and the net profit. The parties to the arrangement decide that they will get a share in the net assets or the net profits. Or the parties to the arrangement decide that they are going to get a share in the assets and liability and the share in the revenues, or we can say incomes and expense. So if they decide that they will get a share in the net assets and net profit, it means that the separate legal entity is established. Because under the contractual arrangement, if they are saying that they will get a share in the net assets and net profits, then in that particular case, it becomes a JV. And if they're going to get a share in the assets, obligation towards liability, share in the revenues, and the share in expense, it is going to become a joint operation, JO. Sir, can you please come once again? This is too complicated indeed. Can you put that once again? Let's put it once again. I will just consolidate the picture once again to you. Watch this carefully at this stage. We're going to work on step 3 later. Let's first work on the step number 1 and 2. And just to remind you, friends, as I said at the initial part of the class, I would be leaving a little early today, around 9. maybe around 10 minutes, 15 minutes to 9. But don't worry, this 1 hour of the class will be compensated to you on next Tuesday and Thursday as well. I'll take a little half an hour extended class on Tuesday, Thursday to compensate this as well. So don't get worried on that. And that's the reason I'm not also giving you a break today, because I'll just continue for some time before I give you. So we'll compensate this 1 hour on Tuesday and Thursday. So be a little prepared for a little extended class on Tuesday, Thursday, half an hour extra each day. So now let me just come back to the thoughts in terms of the block number 2. Watch this carefully. Watch this carefully in terms of the block number 2. In the block number 2, we are deciding on the type of the arrangement. So we are working on the type of joint arrangement. So I'm going to first of all put a question to myself. I'm going to first of all put a question to myself in this particular case. And in this particular case, when you look at the question, we will put across a question: did we create a separate vehicle? I'm putting as SV. If you say no, it is undoubtedly a joint operation. If you say a yes, I need to apply a 3-step model. I think this part should be absolutely clear, I guess. Does net asset means assets minus liability? Correct. When you say it is net assets, it means, in a company form of organization, the shareholders will get a share in the net assets. They will get a net profit. They never get a share in the assets, or they never get a share in the revenue on a separate basis. They will always get residual income, residual net assets in the company. Now, when you say the answer is a yes in this particular case, let's see the step number 1, let's see the step number 2, and then later we'll see the step number 3 as well. Now, watch this. I will first of all see that the separate vehicle is created in which form? What is the legal form of the separate vehicle? So we're going to first of all decide in this particular case that what is the legal form of the separate vehicle. So we say that it is created as a company, or it is created as LLP, or it is created as a normal partnership firm. If you are creating a company or LLP, it is going to be JV, and if it is a firm, then it is JO. Irrespective, we go to step number 2. So when you say that you are creating a company or LLP, a separate legal entity is established. When you say you created a firm, a separate legal entity is not established. So in this case, it's JV. In this case, it's firm. And we go to step 2. But we will not trust the step 1. The reason we're going to step number 2 is we are not going to trust the step number 1. We will again go to step 2 to evaluate. Have the parties by contractual agreement tried to manipulate the terms and conditions or not? So we will then evaluate the terms of the arrangement. We will evaluate the terms of the arrangement between the parties, because sometimes they may structure a company, but then within the parties, they may decide we will get share in assets liability. So they can contradict the concept of legal entity by entering into separate terms with each other. So they make a contractual arrangement in which they decide that we are not going to get share in net assets, net profit, even though they're creating a company. So in this particular case, we need to see the terms of arrangement. If the terms of arrangement are there, or if it is not there. If it is not there, I go to step 3. If the terms of the arrangement is not there, we're going to go to the step number 3, mind you. So if you say yes, then I will say, okay, are they getting a share in the net assets and net profit? Or are they getting a share in the assets, liability, income, and expense? If they are getting a share in the net assets and net profits, then it is a JV. And if it is asset liability, it is income and expenditure. And step number 2 will override the step number 1. Step number 2 will override the step number 1. If you decide JV in step 2 and you decided a JO in step 1, it's a JV. If you decide in step number 2, it's a JO, and you decided in step number 1, it's JV, it's JO. Sir, then why did you look at step 1? If your step number 2 had to override the inputs in step number 1, why did you look at the step 1? Step number 2 can be silent. Step number 3 may not give you any contradictory results. So step number 1 will become the ultimate decisions as well, because it is not necessary that they may have contractual arrangements which will override the form of the legal form of the separate vehicle. So you go to the step number 2 to see any contradictions or not. Maybe there are no contradictions. Maybe there is no need to, there is nothing which is relevant in terms of step 3. Step 1 will become the base to take a decision. So which means first you apply step 1, look at the legal form and see JVJO. Then see the contractual terms and see, is it in contradiction with step 1? If it is in contradiction with step 1, then we will say it is supposed to be step 2 which decides. But if the inputs in terms of step 2 is silent, we will look into other facts and circumstances. We're going to look at other facts and circumstances to evaluate. To evaluate the other facts and circumstances, is there anything to the contrary or not? So as I said earlier, the inputs, the step number 3 will apply only and only if. We will apply the step number 3 only and only if you see that there is something which is silent in step 2. And step 3 will also override the step number 1. Just like the step number 2 will override the step number 1, 3 will also override the step number 1. So step 1 is more like a litmus test. Once you apply the litmus test, you could reach a conclusion in that particular case that it is JVJO. Then step number 2 is seen and it overrides step 2. Step 1. If the step number 2 is silent, you go to the step number 3 and then it could again give you contradictions and step 3 will decide step 1. I know we need to still work upon this area a little more, and we need to do some questions also understanding this 3-step model in a little more detail as well. But I think I'll carry forward that discussion further with you, friends. As I said, I need to leave a little early as announced at the beginning of the session. So I will take a leave today. But don't worry, we'll compensate this 1 hour, which I said, on the next class, Tuesday and Thursday, I will compensate you for half an hour each so that we are also back on track. So at the moment, I need to take a leave from you. So any questions on your end? Otherwise, I think I'm going to take a leave right now a little early. Thank you very much. So on that, I'll take your leave, friends. I'll see you on Tuesday. We'll continue our discussions in that case. Thank you very much. Bye-bye. Enjoy your Sunday.
Thank you, sir.
Thank you. Haji. Thank you, Ji.